Welcome to my presentation on credit and finances. I decided to do a second video on credit and finances to elaborate on how important credit is to your financial situation. It can make or break the difference between whether you get a 3%, 4%, or even 10% interest rate, and sometimes higher than that. So, I'm going to educate you on how you can properly repair your own credit if you're experiencing credit issues. The credit repair industry is a very profitable industry, and usually it's because a lot of people aren't aware how they can do it themselves. Well, typically credit repair companies they charge anywhere from $50 to $100 a month. And by the time it's all said and done, you've already probably spent well over $700, $800 on just doing something that you could probably do yourself. So I'm going to show you how you can do this yourself. Our goal is to be able to be homeowners and be able to drive cars that, we actually want and not have to settle based on, credit due to credit issues. So, first and foremost, my name is Melissa Wilson, and I'm a licensed real estate broker. And I also own an independent agency along with my partner, which is my husband, Trent Williams. So, in this slide, the next slide, we will talk about credit. Okay, why is credit important? It is important for a number of reasons. If you're thinking about the cost savings of a loan in itself, just having good credit could make or break how much you save. So as we get older, our goal is to develop a savings plan. Not only develop a savings plan, implement the savings plan and making sure that you are putting away money for a rainy day, emergencies, anything could happen. So this is a part of that, making sure that you're using credit responsibly. Okay. If you're buying a car, buying a home, depending on your credit score, this could be a difference of $100 or $200 more per month. You decide. So if I have an 800 plus score, I may get the very best interest rate that's available when I walk into a dealership. 2 or 3% sometimes 0%, depending on the dealership and if it's a brand new car, etc. I've seen interest rates go as high as 20%, 21% on some folks that have credit issues. So, that's a huge difference in what I would pay versus what you would pay. So, the goal here is to make sure that you're using your credit responsibly and you're managing your debt. Okay, here's a great example. On the left, good credit. You get an auto loan for $20,000, 5 years at a 6% interest rate. Your payment is about $387. You paid about $31.99 in interest. Okay, your bad credit. Maybe you got a 26% interest rate because that's all you could get. Your monthly payment $599. Your total interest $15,929. What does that do for your savings? Could that money have been in your savings? That $12,000, $12,730 could have been in your savings account. So think about that. $212 a month is a huge difference. Currently, if you're interested in buying a home, and we'll go in detail further later on. If you're interested in buying a home, the FHA minimum down payment right now is $580. You will be required to put down 3.5%. However, you want to be mindful that when buying a home, $580 doesn't always mean you're going to get in that home. It's still pretty tough loan to do because you have to have compensating factors such as assets, good job, money in the bank. So you want to make sure that you're working towards much higher than a 580. You definitely want to be over 640. Lower than 580, you have to put 10% down, and many lenders a lot of lenders aren't even getting getting that loan to the closing table. So, credit is important even when buying a home. Here's just a chart that I want to provide to show you how Americans fare. Okay, you got 800 scores. You're in the top 20%. Congratulations, you've done great. 700, 36.1. 600 and below, 23.2. And then below 600, 20%. You're in the bottom 20% of Americans. You don't want to be there. You want to work towards at least being in, the top 80% of Americans. And people don't realize that, where do I fare? Not everybody's walking around with below 600 scores. You don't want to be in the top. You don't want to be in the bottom 20%. Let's just say that. The key to credit is having credit, using credit responsibly, refrain from being late on accounts, refrain from allowing collections to be placed on your report, maintain use of active credit, managing debts and what is reported on your credit, over use of credit, co-signed accounts, don't do it, managing different types of accounts, longevity of accounts, closing accounts and how it may hurt or help you, managing student loan debt properly, actively monitoring your credit monthly. So let me elaborate on that. When I mean having credit is important, you have to have accounts on your credit reporting, period. That is the only way you get credit. So people who pay cash for everything, it doesn't help you at all. So having credit, meaning the credit bureaus are monitoring, okay, this person currently has credit on their account, okay, and they're using it responsibly by paying on time, okay. So when you pay your bills on time, they're able to monitor and evaluate how you fare as a borrower when it comes to getting loans, okay. It's really important that you manage these accounts that are being reported. So you want to make sure that you're not over the limit on your credit card. So if you have a credit card limit of $1,000, you want to keep your balances 30% or below. And you want to make sure you're charging those accounts actively monthly, because this is how you maintain that good credit and keep that score up, okay? What you will find is a lot of creditors will lower your credit limit or even cancel your card when you're not using the credit. So you want to make sure you're still using it, but using it responsibly. Pay it off on time every month if you can. Okay? Late payments will hurt you worse than a collection. So if you're late on an account, you will find a drastic change in your credit score. You want to make sure you are not late on accounts. And once again, refrain from having collections placed on your accounts. Okay? You want to make sure that you have a good mix of accounts. So a real estate account, an auto loan, a credit card, student loans, that's considered a good mix. So you want to have a good mix of accounts reported. And how long you have the accounts open, it matters. Because if you open an account in, let's say, 1996, and you close that account and it was a good active reporting account, you've just hurt yourself. So you want to make sure you keep those old accounts open, okay? And make sure they're reporting accurately every single month on time. You want to make sure you manage your student loan debt, okay? Your student loan debt is very, very important because it is a part of a good mix, but you want to make sure you're doing the proper things like putting those loans in deferment if you can't afford to pay them. There's something called the IBR plan that you can contact your servicer about. It is the income-based repayment program, and this program will allow you to go by your income. And so Sometimes, you may easily get an income of, a payment of zero. So make sure you're doing what you need to do by putting these student loans in deferment if they need to be deferred. Making sure you're properly following up with these because this is very important. They do report. And even though you're in deferment or you're on the student-based income-based repayment program, it still reports on your, even if you have a payment of zero, it still reports active and on time on your credit. Okay, so you want to make sure that you're responsibly calling these servicers every single month and make sure that you are consolidating that debt. So if you have 8 or 9 student loans out there, call Nelnet or Direct Loans and get that consolidated into one so that you're not calling around 8 or 9 different people every time it's time, each time you have to renew. You want to make sure you're actively monitoring your credit every single month. You want to make sure that, each time, and it is a paid service, but you want to make sure that you are doing this because you want to be aware of anyone that's pulling your credit because inquiries can equally hurt your credit as well. Okay. Examples of open trade lines. So you want to make sure that you have at least at minimum 3 reported open trade lines. That could be secure credit cards, unsecured credit cards, student loans, auto loans, mortgage, lines of credit, secured and unsecured. So secured credit cards basically are lines of credit extended to you, and you have to put a deposit down in order to get this line of credit. It is going to report on your credit report, just like an unsecured card would. However, you have not shown responsibility in managing credit. So a lot of times, these companies aren't willing to take the risks by giving an unsecured card to the consumer. So it's okay. I want you to make sure you open these because this is how your credit can effectively, start. So you want to be able to make sure you are investing in your credit. Okay, you have to invest at first. Invest means if you got to put down the $200-300 for the deposit, do it because it's going to be worth it later. Okay. Unsecured, basically, your credit is being extended to you with no deposits. Student loans, auto loans, mortgage, lines of credit. This can be done with your bank. And there are also secured and unsecured form lines of credit. So I recommend doing all of this so that you can get on the road to having a good credit future. Okay, so if you have to start off with a secured credit card, I have some examples of where you can go. Once again, I recommend 3 trade lines at least at minimum, okay, to get this started. Credit One secured card, there's a link where you can go and get that one, Capital One at First Premier Bank. First Premier Bank will report within 10 days on average. So you'll start getting that reported almost immediately, okay? You want to make sure that you are monitoring your credit. Here are some examples. TransUnion, Equifax, all have monitoring services that you can use, but Privacy Guard will monitor all 3 bureaus. Okay, it is very important that you monitor all 3 because what's reported on one may not be reported on the other. So you want to monitor all 3 of your bureaus. And there's a link. Once again, credit score factors, on-time payments, capacity, how much of your credit are you using? That's important. If you're using, let's say you have about $10,000 worth of available credit, but you're using 70 to 80% of it, that hurts you so bad. You want to make sure you pay those down to 30% below, okay? The length of your credit history, the types of credit used, having a good mix, past credit applications, inquiries, they hurt your credit, okay? So you want to make sure that your creditors actually have permission from you to pull credit. Okay, you have soft and you have hard hits. Hard hits is when you go to the auto dealership and say, hey, I want to buy a car. That's a hard hit. A soft hit is nothing more than maybe insurance companies pulling your credit. It could be um, your current creditor just monitoring your debt. Those are soft hits and don't affect you. Okay. Here's an example of a dispute letter. And you will need to write these letters to all three bureaus, Experian, Equifax, and TransUnion. You can't do it to just one because, once again, you want to get all three of your bureaus squared away. Okay? And this is an example that you can use. Also, I want to note that with insurance companies, a lot of people didn't know that insurance companies will take a look at your credit profile. They will. It is a soft hit. Once again, it doesn't affect you, but your insurance rate, believe it or not, hey, the difference between you getting a better insurance rate depends on your credit profile. And of course, you have other factors as, such as accidents and loss history and things like that. But credit also affects your insurance, so keep in mind. If you want to contact Equifax, you're entitled to an annual free credit report every year. Okay? So if you go to annualcreditreport.com, you can request a free copy from all three bureaus. You can also call Equifax as well, and as well as Experian and TransUnion. If you were denied credit, you're also entitled to a free copy of your report. Okay? So you want to make sure you're requesting this once you start from all three bureaus so you know what's on there so that you can write your dispute letters. TransUnion, there's a link. Experian. Thank you for tuning in, and I appreciate your time. And once again, if I can assist you with purchasing a home in the future, once you get your credit situation squared away, please let me know. I would love to help. And if we can also help save you money on your homeowner's insurance or your auto, please let us know. We're here to help. Thank you so much. And also a disclosure, if you would like a copy of this slide, you can email me at melissa@melissamwilson.com, and I will gladly send you an email copy of the slide and my credit repair playbook. Blessings to you.